Kevin Hunter, your North Texas home hunter,
Bryan here, Cardinal Financial.
bringing you a new version of Money Matters, and today we're focusing on first-time buyers. When you're starting out for the first time, it can be a pretty intimidating experience, right? And so you definitely want to make sure you have some really strong advocates in your corner. And so that's what we want to talk about today with Bryan, his 30 years of experience and kind of what he brings to the table and some of the value he can bring during that process.
Well, thank you. I appreciate being able to get involved in that because you're right. It can be an intimidating process. I can tell you that a lot of folks who want to get into the process of buying homes, they actually hesitate because they're worried about what the process would look like. They have, they don't think that they can be approved when they actually can. They think it may take a whole lot more money than it actually takes in order to get a house bought. One client I actually am working with right this very moment, she's actually in her late 60s. She came to me last week asking to see if I could help her buy her first home. She's lived in a family home that she's had she inherited many years ago, but she's never been through the process. She's 69 years old. So as I'm talking to her, I realize she has little to no debt whatsoever. She's been on the same job for over 20 years.
Wow.
She has a significant amount of money in the bank and a bunch of equity in the home that she inherited, 20 years ago that she's going to sell.
Right.
It was super easy to show her how her process could be, how her picture could be approved, and how easy it was, and how non-costly it was going to be for her.
Yeah.
But that's just one example, because I've got another young couple. They're wanting to get into the process, but we don't have very much money. When I talked to them about how much money they actually had a decent amount of savings in hand, but they thought they had to put down 20% to just get in the ball game.
Yeah.
I'm like,
well, hold on a second. Where did that come from? Because I think a lot of people think that. Is that what it used to be?
Older lending rules, longer than I've been in the game, though. I mean, it's like a long time ago. But they're hearing it from grandparents or from parents that bought back whenever all that was true. But if you're a first-time home buyer, there's a conventional loan with only 3% down. Depending on your income levels, the rates may be a little more attractive than a normal conventional loan. The PMI might be a little less expensive than a normal conventional loan. But let's say, what if you've had some challenges on your credit? So your credit's less than perfect. That doesn't mean you can't get a home with even 3.5% down, because that's where FHA fits in, right? For those first-time home buyers that have had some challenges or may have a little tighter debt-to-income ratio picture, there's so many programs that we have the ability to get our hands on. But in conjunction with a conventional loan or an FHA loan, the state of Texas has many down payment assistance programs that help lean in with as much as even 5% of the purchase price as closing costs and down payment assistance program assistance. So we can truly help some home buyers get into the home with nothing more than maybe an earnest money deposit and paying for an appraisal. And sometimes they get a little bit of that money back. So it's very important that if anybody has any interest, it costs nothing. Like my mortgage analysis is absolutely free. We do it all just to try and help earn their business and help them get into a home. It's important just to get in the game, make the phone call, fact find. Nothing can be hurt.
Well, and it's what you and I talk about all the time, right? It's like having the information to make the best decision for you. And that's why I like when we work open houses together, right? I love seeing those young couples walk in and they're like really not sure, right? This is kind of our first attempt. I don't even know if it makes a ton of sense to buy a home. And you're able to kind of sit down with them right there and kind of work through the numbers, right? And then show them this is how quickly you can start building equity.
Absolutely. Well, and to that end, the numbers just came out literally yesterday, to where the projections for home equity building in nationwide last year ranged somewhere between 4.6% and 5.2%, depending on the four major rating agencies. After everything came out, it was actually 7%, literally nationwide, even with some areas that had some softness, but some other areas that were still moving forward. So 7% was the average homeowner appreciation gain in the year 2023. So let's talk about Frisco, right?
Yeah.
Now, the average home price here, the median home price, is well over $500,000. Let's just use $500,000 for a round number.
Well, in Frisco, the median price, literally the past few months, has been over 700s.
700.
Yeah.
Okay, so let's use 700 because that's still an easy number. That's $49,000 in appreciation. And
In 1 year?
In 1 year.
Wow.
So that house, if you wait until this time next year, it's going to be $50,000 more expensive than it is now.
Yeah.
And while rates are elevated from where we believe they're going to be by the end of the year, because Fannie Mae came out Monday of last week saying they expect rates to be underneath 6% by the end of the year. Okay. So let's say they just go from 7 down to 6. On a $500,000 house, that changes the payment in the neighborhood of $460 a month. So on a $700,000 house, if I'm making an educated guess, I would guess 630, 620, something like that.
Yeah.
$630 a month is what we could refinance you to, and yet you would owe less money on the house, $50,000 less on the house.
Yeah.
If you buy now versus waiting.
Yeah. Yeah. And so to me, that's just kind of simple math.
It is, and you can't ignore it. Getting in the game sooner is better than waiting and trying to time that market. Be in the market. Don't try and time it.
Well, yeah, because we saw the feds come out and say, yeah, they're going to reduce rates 3, 4, 5, 6 times in 2024, and then that number or more in 2025. Yeah. And so here in North Texas, man, the housing market went crazy, right? I mean, I talked to several people, including you, who said, we're getting multiple offers on these homes over list, right? And we haven't seen that in a while.
No.
Right? You saw little one-off examples, but I was hearing that from a lot of different lenders and a lot of different real estate agents, right? Yeah. A lot of my peers. So like with just the good news and a little bit of tick down of the rates, right? I mean, it was already kind of a crazy scene just for that month of January. And so to your point, when you're trying to time the market, you can't. Right. No. And so if you move forward now, you'll start building equity and you'll come out ahead in just a year.
Yeah. I can tell you that January was the busiest uptick in loan applications and pre-approvals we've worked on in nearly 18 months. I think it was 16 months when I went back and counted the last time we'd worked on that many loans in one single month. And it's only February the 6th now. So basically we had Thursday and Friday and then yesterday and today. And literally we're going, where are all these loan applications coming from? Yeah. Now, we know where they're coming from, but why are they coming now? Right. Why weren't they coming? Now, I'm glad they are, and they should still keep coming because now's good. But I think the Fed tamping down that expectation of higher for longer, it brings a positive sentiment that, now with the turn of the year, it's kind of like people are like, you know what, I'm done waiting.
Yeah.
I think, rates are not that bad. I do think they'll come down. They're getting into the market, and we are truly seeing multiple offers, and we're seeing it all over the North Texas area.
Yeah. I mean, I think it's funny. People viewed last year as like, oh my God, the rates were just crazy. They were so bad. It's like, well, historically, they weren't that bad, right? I mean, compared to the previous couple of years where they were just bananas, 3, 4%. But historically, as far as rates go, those numbers are pretty accurate, right? Yeah. Pretty much in line with everything. And I think what we saw in January was, we don't know for sure, but we're all guessing based on the lack of sales the previous year in 2023, that there's a lot of pent up demand.
Yeah.
And I think that's what we saw in January is people saw, there's enough of a drop in the rates. I'm jumping in now. Right.
Well, and you also have sellers that were holding on because the rates were where they were at.
Yeah.
And now these rates are semi-normalized, even though they're now kind of trending back in the right direction. You've got sellers entering back into the game, being willing to put their house on the market, who were sitting on it last year because they thought things were so grim, per se. But now they're done waiting for doing what they want to do for their family.
Right.
I even talked to a client this morning who had considered in 2022, in June of 22, moving from Caddo Mills to Farmersville. And they held off because, things were just so crazy. Rates were at 6% back then, right? In June of 22. And lo and behold, now, rates are higher than that right now, even though they're coming in the right direction, but they're done waiting.
Yeah.
They want to get something in the move, and that way maybe as school is letting out, they're making that move to get their daughter into the Farmersville ISD and moving back north versus east in Caddo Mills. So people are just they're done waiting, and that's creating that like a frenzy of sorts, and it really is there. Even in Austin, I've got a client right this very moment. They made offers on 4 homes before they won an offer.
Wow.
And the other 3, they were beaten out by multiple offers each time.
Yeah.
So they've got a great client advocate and their agent down there. He was advising them correctly, and they still lost out at the first 3. But we got that contract yesterday on the 4th home.
Wow. Yeah, because I had a client late last year miss out on one in kind of a bidding situation, and that's really That's a really tough position to be in, right? Because I was trying to help them understand, hey, look, this is where I feel like it's going to come in. And they're like, well, we want to go a little bit underneath that. And I'm like, that's fine. Just realize I don't feel like this is a winning bid, right? Like, I don't have a crystal ball. I don't know. But when you've been doing this, kind of helping customers in these kind of situations for, years.
You know the market.
You know the market, and you talk to friends, and everybody has similar experiences, right? And you pull that in, and allows you to give really sage advice to your clients. And so we missed out a little bit, and I could tell they were frustrated, but they're like, that's okay, we'll move on to the next one. What did I hear every single house we went into? Oh, it wasn't like that house on Virginia.
Oh yeah, the one that got away.
The one that got away, and everyone, I like the pool at the one on Virginia better, right? And well, this one has kind of a nicer, the one in Virginia had, the Virginia Street had a nicer kitchen, right? And so it's really tough because you're advising people to spend more money, but at the same time, if you really want the house, then what does a couple $1,000s matter?
That's a conversation I'm having every day. Is our clients have to be tactical with this decision, with this process. Yeah. It can't be emotional. And when you make that emotional decision to want to come in lower because you want a deal, that kind of deal, and then you lose out on it, it actually hurts. I mean, it can actually be an emotional bruise, right? So time. I'm talking to young couples and to experienced home buyers even now. Make sure it's tactical.
Yeah.
Make that reasonable decision that's best for you guys. And like you said, if you see the house that you want, I'm saying don't lose it over $4,000. Don't lose it over $5,000. If it's in that area, get that house, right? I mean, because that'll mean more to you a year from now than whether you did or didn't get $5,000 off of it.
Yeah.
Right. So keep it tactical. The moment you're under contract, then it can become emotional. Right. Yeah. Then start having the fun with it. But until then, don't be pressured into feeling like you have to negotiate or you're not getting the right deal.
Yeah.
Keep it tactical, not emotional.
Yeah. Yeah. And that's part of it, right? Because your job and my job is to set our clients up for success. What we can do on the front end can take some of the emotion out, right? Because you want them making really good, sound financial decisions, but you want a little bit of emotion in there, right? You want to fall in love with that house, but you want it to be a house that actually makes sense for you. And that was a house that made sense for them. There were, when we were going through it, I could hear them say, oh, this view from the living room out into the backyard, or the way this overlooks the pool, and some of the ways the bedrooms were set up with some of the in-suites, and there was another almost quasi-master downstairs. I mean, it was just a perfect fit. And so, as much as we try and help them take emotion out of the equation, it's inevitable. People are going to buy because of that, and people fall in love with a home because of that.
Right. Go get that house.
Yeah. So don't let $4,000 be the thing that stops you, because they ended up just opting out of the buying process altogether. And I think there was a couple other factors, but I think that was a big piece. Was we don't see anything like the very first house we fell in love with. So that's tough.
I have a church friend who 3 years ago, when rates were really, really low, and they're here in the Frisco, McKinney area, Craig Ranch to the east of Western Frisco. His wife was really she was getting burdened, torn down in herself for losing out on homes.
Yeah.
And so I'm like, okay, but keep looking. Don't just stop. I mean, you guys, you're financially there. You're in a position you actually should be owning a home. Here are the benefits from it.
Yeah.
And honestly, I mean, he'll answer a text from me now to talk about whatever it is, but they're still not talking about buying a home. They're still renting over in McKinney right now. And I don't think that's the right move. That's not the right financial move. They're missing out on wealth building over the last 3 years, even, for that matter.
Yeah.
So,
well, and I saw you going down to an open house, and I think you and the agent helped a new family, a new young couple into a new property. And the thing that really struck me was those guys are ahead of the game. Right? Like, I would be like, oh no, renting makes way more sense, and let's wait for the market to stop and interest rates to come down, right? Because that makes more sense. Let's just rent until it makes sense. But if you really dive down into the numbers, right, and you do kind of your calculator and the analysis around that, you have the information to make the best decision for you. And I would say a lot of the time it's not to rent, right? Because that's money you never get back, right? But when you start building that equity, I mean, you can sell a house a year later. I mean, our house has doubled in 10 years, right? And that's a significant amount of money.
It's absolutely awesome. That young couple, actually, they did move forward. They were talking about holding off until rates came down. And so I actually got on camera, got onto a Zoom call with both of them. And I showed them that equity building tool that we have and showing them what they're paying in rent versus what you're going to pay. It literally was $210 more a month to own the house at the rates that they're at right now than the rent that they were paying where they're currently at. And when they saw that difference and they saw what we can do when rates do fall and we can refinance them, I mean, they're like, oh, okay, yeah, let's do this. And they had a family member that was even kind of advising them maybe to hold off. But they took the data that I showed them to that family member, and everybody was on board immediately. So yes, getting in it, making sure that you're getting the benefit of those payments being made, not a landlord.
Well, and I think people are more aware now, right? The buyers are more sophisticated, more mature in the investing process and realizing the benefits that come with that value, right? I think back in the old days, like, no, we're just going to rent until we're ready to buy, right? But at the end of the day, if you understand the equity you can start building, even in just a couple of years, then that way overcomes any kind of benefit you would get from renting, right?
Absolutely. I totally agree. I'd like to maybe shift gears real quick because of a topic that's been brought to me literally 4 times in the last 2 weeks. What does it look like to assume a loan? Okay. Well, actually, pretty much every loan out there that is a conventional or a government-backed loan, FHA, VA, USDA, or Fannie and Freddie, those loans can all be assumed.
Okay. And for the viewers at home, what does assume mean?
That means you would take over the loan that current homeowner has at the rate that they currently have.
Okay.
Okay. Now, here's what is not well known. The buyer has to be willing to pay the delta between what the sales price is and that loan amount is. So if you got somebody that's selling a house for $500,000 and they owe $350,000, the buyer's got to come up with $150,000.
Wow.
Okay. There's not a loan that you can go get for that $150,000 unless you're borrowing against some other asset.
Yeah.
Okay. So listing agents are not tricky in listing that on the advertisement, but most folks don't have that extra, that significant amount of money to pay the difference between what the homeowner's current loan is and what the sales price is going to be. So that's number one. Let's say they do have the money. We are actually seeing that a lot of the loans that try to be assumed, it takes a lot longer. It's not a 30-day process. It can be north of 3 months. And then we're seeing somewhere along that way, there's a disqualification that keeps that loan from going through. And yet you've got a seller and a buyer and agents tied up for 60 to 90 days. So while it's a good idea, and if the situation does fit, it's maybe a good fit for them, but reach out, ask questions about that. Let us help you investigate the difference between buying a normal standard mortgage, even at today's interest rates, versus what it would take to assume a home loan of somebody that may have a really low interest rate in the current market.
Right. Yeah, that makes sense.
Cool.
Anything else?
That's pretty much what I got.
Do we want to talk about like market stuff in general, or is there anything that we're missing?
I mean, not right now. I mean, we did mention that the Fed's rates coming down. The job. I really don't want to talk about negative stuff because that's really what we got on Friday was negative.
Yeah, I don't think that's a bad thing. I mean, we don't want to just depress everybody, but say, hey, look, just kind of keeping you guys up to date. Here's what we heard, and so these rate drops that we thought were going to happen in March, it looks like they're going to be pushed back a little bit, right? So still lots of great opportunities out there before, you want to work on your timing. Now is the time to really start looking into it.
Okay. Yeah, cool. We'll do that.
Yeah. So, and then you were talking also about kind of the recent jobs reports and some of that stuff. And I think it's weird to hear the Feds talk about this stuff because it doesn't seem like they really kind of get deep into it. Like, what does that really mean for a jobs report, or what does that mean for this, right? And like they talk about, oh, we had this much spending, right? But then you also hear it's like, well, the U.S. is at like historically high credit card debt, right? And so help me understand from what you heard, what you're seeing from the market.
Right. So the first Friday of every month, the Fed publishes, it's called the non-farm payroll report.
Yeah.
So it's essentially like, where is the country headed with jobs that have been created the previous month? Okay.
Yeah.
the last 2 years in a row, there's been a ridiculously strong number in the first Friday in February, and the markets react to it in a way that would appear that it would be positive news, when in fact it is including those seasonal part-time workers that work that take an extra job over the holidays and then don't keep that extra job. Okay, so last year, and we expect it again this year, while they came out really, really strong on Friday, it's going to be revised lower over the next 2 months when the final numbers come out. And actually, that would be the 5th month in a row that the jobs number has actually been a positive number and then been revised lower over the subsequent months.
Right.
So what did that do? Well, that actually gave the investing public, whether it's big firms, all the investors, they jumped back into the stock market and they sold off the mortgage-backed securities and the treasuries a little bit, to where rates actually kind of ticked up on Friday and then yesterday. We're getting a little bit of good news this morning, but at the same time, like as you were saying a while ago, the economy as a whole, it really still is at a very delicate balancing point, because as a country, we hold more debt in short-term debt, credit card debt, than we did before the pandemic happened. Right? And yet, there are companies laying off tens of thousands of people even right now, and the delinquencies on auto loans, credit card debts, even homes, they are starting to increase some, and that's a byproduct of the economy actually not necessarily being as strong as the jobs numbers we saw that come out on Friday. So those types of things can present opportunities where sellers have to sell, and they need the equity out of the home to cover debts that they have brought themselves into, or if they've had a family member lose a job, they've lost income, so then they need to sell to be able to cover for an income loss. We think that those are going to help also put some more homes back in the market in the near future versus in the longer term future as well. Predominantly though, we've seen rates trickle in the right direction in our favor since the end of October, with a couple of minor blips, with Friday and yesterday being one of those minor blips. But while rates can go in the wrong direction or the right direction very quickly either way, most of the time they go in the wrong direction quickly and then they trickle back in the right direction. So it might take us, a week or two to get back to the ballpark of where we saw prior to Friday's jobs numbers.
Interesting. And as far as what we're seeing kind of on the real estate side, it's still right on that very middle between a buyer and a seller's market up here in Frisco. The prices are still good. The days on market are still high 70s, low 80s, and I think we're starting to see some new construction we're going to see some inventory kind of popping up and kind of reducing some of that crunch. And we're seeing, kind of depending on the home and the location. In 75035 zip code, I'm seeing homes going in 2 weeks, right? And then others are taking a little bit longer, right? So it's, you have like these blended numbers, but if you look at, each zip code or each neighborhood, you can really parse down into what houses are moving quickly and which are the ones that are kind of causing that average to go up.
Right. Absolutely. And it definitely is going to be localized. It's going to be different, whether you're in the Colony or Allen or Frisco. It's definitely going to be something that you need to be consulting your real estate professional about to find out what that specific market looks like.
So that's it for today's money market. Hopefully you got some good information, not only on the financial side, obviously the money part that matters, but some real estate relevance kind of wrapped in there to make it worth your while. So we will see you soon checking out. This is Kevin Hunter, your North Texas homeowner.
Yep. Ask any question you have, comment below, or shoot us a DM. We'll get back to you as quickly as possible.
Subscribe and like, and let us know how we can help you. Thanks.